Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for WealthPress. Today is Friday. Where did the week go? I have no idea, but it's a Friday. It's May 21st, and it's the last day of the third week of May. And I got to say, there's a lot of birthdays in May. We got a lot of people working for WealthPress. I want to wish each and every one of you a happy birthday. People like to have kids around May. Who knew? I'm just messing around. My dad was born on the 27th, so we got a birthday coming up here next week as well. All right, it's about 7:50. The market's going to open up in about an hour and 40 minutes. We've got two big reports. We've got the producers. Let me give you the whole shebang and shabam so you could see what it is. It is the purchasers, not producers. Purchasers Managers Index. The estimates are about 60.5. I think we're going to come within range. I'm not expecting anything crazy here. I think the manufacturing sector has been doing pretty well, and I think the purchaser managers numbers are not going to be that off. Next big report is existing home sales. Now, home sales have been rocking and rolling lately. I mean, really rocking and rolling. And the truth is, if the number is anywhere within the range, we should be okay. Honestly, 6 million units and over, I'll be very, very happy. So I'm not really expecting anything. And the truth is, these indicators haven't been moving the market too much. The big indicators that have been moving the market is this is where I got the manufacturing part right. The Fed Manufacturing Index, which is not showing signs of strength, and jobless claims, which is doing really, really, really well. Jobless claims numbers yesterday showed that we're at 444,000. We're still below 500,000, which is great. But manufacturing activity, which is choppy, was way, way down. Expectations were 39.5 to 48. We were at 31. So again, today's reports are not that big. Yesterday's reports were the big deal. In terms of the futures, we're up pretty good right now. Dow's up about 150. That's beyond random. S&P's up. Even the Nasdaq is up. Now, if you're looking at the S&P, we never went below the 50-day moving average, and this is going to be the second day above. So I'm officially back to being bullish on the S&P. On the Nasdaq 100, this is going to be hopefully our first day above the 50-day line. And as long as we don't touch any part of the low, does not touch the blue line for the next 2 days, including today, then I will give you a bullish bias again on the Nasdaq, but not quite yet. We're not there yet. Let's look at global economy. We haven't done that in a few days. Wall Street broke 3-day losing streak. Investors were encouraged by latest jobs report. That's this report that showed 444,000 claims. Prices for everything from gasoline to lumber, oh yeah, inflation is here, have been rising sharply this year as the Fed says there's no inflation. It's transitory. As the economy reheats after the pandemic, investors have been worried about high inflation that may cause the Fed to pull back on the stimulus, which may be necessary. Primary survey of manufacturing in Japan Purchaser Managers Index, or PMI, showed weakening from May from the month before. Similar trend was seen in services. Now, there's a state of emergency that has been declared in Tokyo and some cities and regions near it. And remember, they're gearing up for the Olympics. I don't know how that's going to play out. That's a big question mark. Data showing Americans seeking unemployment benefits fell to 444,000. The problem is they're not really hungry to get new jobs. It's like they're sitting at home and being happy with these stimulus checks they're getting. A new pandemic low and a sign that the job market is healing as consumers spend more freely again, viral infections drop, and business restrictions ease. On that note, part of the decline may be fueled by Republican governors who have opted not to allow the residents to claim the $300 a week supplemental benefit that came with the latest economic relief package. The move could be pushing more people back into the labor market. I sure hope so, because it seems like a lot of low-waged employees, low-waged employees are just sitting on the sidelines because they're getting so much unemployment benefits. Now, again, I don't want to get political here, but we need to see people starting to get jobs. So again, looking at the futures, we're up a little higher. The S&P is up. If you look at the mid-caps, I think the mid-caps are doing pretty well as well. They're now at the 50-day line. Be a little cautious on the mid-caps. It's interesting that the Nasdaq is actually outperforming a little bit of the mid-cap, which is positive, and it's telling us that technology is beginning to show some strength. Now, I would be very cautious. I wouldn't go long tech till we're above the 50-day moving average, completely above, and we're not there yet. Therefore, right now, we still want to be very, very cautious. Look at the market breadth. There's only 14 stocks making 90-day lows and only 104 stocks making 90-day highs, which is telling me that the markets are pretty choppy. Usually you'll see 300 stocks making 90-day highs, 60 stocks making 90-day lows, 100 stocks making 90-day lows. These numbers are very choppy, which is telling us that the market is still rather choppy. Now, if you look at the main indices, which I'll go through right now, if I could find them here. Where are my indices? Where are my indices? Here we go, 11 sectors. So again, financials are looking pretty good. Energy's looking kind of choppy, but not too bad. Utilities is just kind of not really doing much. Industrial looks like it's bouncing back and it's about to pull back higher. I like that. Basic materials looks pretty good too. Healthcare is looking strong right now. Technology, the slope is too big. Consumer staples is looking pretty good actually. Defensive, remember that. Telecommunications sector is looking a lot like the utility sector, a little slopey and not really much bias there. Consumer discretionary I don't like, looks a lot like tech. And real estate's looking pretty good. So out of the sectors that I really like, I like the industrial sector. It looks like it's going to bounce back up. I like financial. I like energy still. I like the consumer staples actually. I like healthcare. And I like basic materials. I don't like the communication sector, consumer discretionary, or where's technology? Or technology. Too slopey. May just kind of come up here and then stop and then go back down. I like pullbacks near all-time highs or previous swings. And on that note, I've got some good stocks for you. Again, these are boring stocks. These are not stocks that are the next Amazon. For example, Summit Materials. Did they do exciting things? No, it's a construction material company. How exciting can that be? But it's in the Russell 2000, market cap only $3.6 billion, 131% return. And if you look at the stock, let me show you the stock. Nice smooth trend, pulling back. When the market broke the 50-day moving average, what did we do here? We didn't do anything. We just stayed low. So if we break these two lows, there's a good chance we'll go back. I mean, if we don't break these two lows, there's a good chance we'll go higher. And as you could see here, the trend has been really strong for a long time. Summit Material, ticker symbol SUM. Basic materials company. Very exciting? Obviously not. West Midstream Partners. What did they do? Operate, acquire, develop energy assets, gas, oil refining. 142%. Exciting? Not really. And it's got a market cap of only $8.7 billion. It's not a $50, $100, $200 billion company. And again, if you look at the price levels, it's been coming up pretty good. Even on a 2-year basis, it looks like it's right where the last February, a little bit above the break that we had right here. So it's moving higher, and I like the pullback we're seeing in energies right now, and I think we're going to see some more upside because this market is not done trending. So we got Summit, basic materials, energy market. Now we got global metals and mining producers ETF, PIC, ticker symbol PIC. Very simple. Gold, metals, mining producer. Look at the 3-year chart on this sucker. Nice, right? Making swing highs. Pulling back, hasn't hit the 50-day moving average. So PIC, get your shovels and picks. PICK, Western Midstream, and Summit Materials. All 3 basic materials. Again, keep it simple. Don't go complicated right now. This is not a time to be a hero. Now, what if I said there's a way for everyday traders like you, just like you, to take and make double, even triple-digit winners at will? And no. I'm not talking about easy money when the markets are going up. I'm talking about potentially making these type of gains even when the market tanks. Oh yeah. And a high degree of accuracy too. Well, my friend, good friend, Wall Street legend Chuck Hughes, he's a heavyweight trading champion. He's revealing a never-before-seen 3-piece blueprint that he's calling triple threat. Now, unless you've been hiding under the rock for the last 2 weeks, you've heard about it already. But it's time to check it out. And he's giving a select few students the chance to start off with a special $50,000 challenge account. to potentially giving them all the tools they need to make the returns of a lifetime. You don't need a big account. You could do it in an IRA. No naked options, no butterflies, no monkey business. Clean, simple, easy. Again, make money in all three market cycles, and Chuck's real-time performance has been over 90% accuracy in an up market, down market, and a sideways market. And that's why I want you to get in on it. And again, he's giving a select few students a chance to start off with a special $50,000 challenge account. Learn all about it. Click the link below to learn more about Chuck's triple threat and see why so many traders want it. I want in. I'm going to get access to it. And remember, we're going to have a getting started session on June 1st, and we want you in before then. And as always, follow this link, get in on this. And as always, make sure to like this video, subscribe to this channel. Folks, if you're watching on YouTube, be the first. Stay ahead of the market by being the first to be notified when we post new videos. And send me a love letter. I want to hear some feedback from you guys. I haven't heard from anyone in a while. Bye, guys. Have a great, great day. Take care.